What's happening? So guys, check here. I literally came here just to kind of like enlighten you guys on something. So earlier today, I was actually with a brokerage. I'm not going to mention the name, right? I'm not going to mention the name or anything like that. The weirdest thing, I saw the weirdest thing. So at first, I didn't believe it. I didn't know what to make of it because I'd heard about it, but I'd never seen it, right? So today, I get invited to a brokerage firm, you understand? And this person is so easygoing, so down to earth. He's showing me everything. And then, guess what pops up? He then starts to show me that there's actually a B book and an A book in regards to orders. So B book being in-house. And I was like, wait a minute. So this is actually real. So this is actually real? I was shocked. I was like, what? So now I'm behind the scenes, guys. I'm actually behind the scenes and I'm watching this. And I'm actually able now to see order flow. And I'm shocked. And this person's showing me this. And I'm just like, I'm pretending like I don't know what's going on. You understand? I don't know what's going on. I can't see anything. But I could see it detail to detail. And funny enough, he actually told me. So I asked him about it. And he actually told me that only 3% of traders, their trades actually get activated in a live market. The rest are not worthy. I was mad. I was like, what? 3% of traders get activated in a real market. The rest aren't worthy because this person was like literally like, yo, man, what's the point? Because they're just going to lose money. You understand? They're just going to lose money. And I'm like, okay. So he calls it an in-house. He's like, listen, so we've got in-house and we've actually got trades that are activated in a live market. I'm like, so I want to go deeper into this with him and I'm chatting to him and I'm not trying to make it too obvious that, you know, I want to get information here, but indirectly I'm getting, you know, answers and I'm like, wow, you know, and I kind of like move away from it, go back to it, move away from it, go back to it. Because we're having a conversation. I was with him from roughly 11 all the way over till about 4-ish. 3-ish. Yeah, between 3 and 4. And this guy, bro, the guys at the broker can't trade to save their lives. I was shocked. This guy is talking about things that like didn't make sense to me. And I'm thinking like, dude, like, isn't this like, aren't you like a shareholder of this brokerage? But this guy doesn't even know how to trade. And I'm just shocked. I'm like, what? So the guys at the brokerage don't know how to trade. The owner or the owners, co-owners or whatever the case is, don't know how to trade. I'm like, what the fuck is going on over here? Because, you see, for me, I'm the type of person to get into it. So I'm there with my chart. I'm showing him things. I can see he doesn't know what the fuck I'm talking about. He has no clue what I'm talking about. The minute I mention support resistance, he knows what I'm talking about. But the minute I go a bit deeper and I start, mentioning like insufficiency or FVG, what's that? Dude, you're a co-owner of a brokerage. And you like what? Don't you do research? Don't you I was shocked, guys. These people don't know what the fuck is going on in this market. They don't know how to trade. And I'm just like, madness. I was mad because when this person told me 3% of actual traders, 3% of traders, their trades actually get activated in a real market. Which means 97% of traders are in their house. So they call it in-house. I didn't want to I'm not going to name the brokerage, but I didn't want to get too into it with him because I didn't want him to see that, listen, I'm trying to gain knowledge here. You understand? But, and I feel like I'm safe if I don't mention it because then, he'll know that I know now, but he'll also know that I haven't mentioned his name, and that's because I respect, his hustle and, whatever it is that's going on with him. But he doesn't know how to trade. He doesn't know how to trade. Right. One. So at first, like I said, I didn't know. I knew about it. I heard about it. But I didn't acknowledge that maybe it actually is real. So I've heard about it. Like, there's A-book brokers and there's B-book brokers. There's nothing like A-book brokers and B-book brokers. It's A-book traders and B-book traders. And I'm like, what? So you could find out that this broker is actually registered. He's authorized. He's 100% genuine. But he just doesn't want to waste money. So what he does, right, is he then doesn't activate your trade. He sees you not worthy to act. This is what he told me. He sees you not worthy to activate your trade in a live market because you're just going to lose money. You understand? So I'm like, heck. And this is it's a big brokerage. It's quite a big name. I think it's as much as it's gone very local, it's also international. So I went to the South African office, and because he was like, listen, he's gonna be so. Yesterday he was telling me he was flying in from Namibia to South Africa, to the head office or their office this side, and I should meet him. I'm like, okay, cool. And I'm like, is this man serious? So there's about 3 co-owners, guys. 3 co-owners. None of them know how to trade. None of them. Because I asked him, like, listen, do you guys, tell me, I was like, listen, so, how do you know what the market's going to do? And he's like, bro, I'm going to be honest with you. I don't know how to trade. I'm like, huh? I'm like, what? Like, what? You own the brokerage, but you don't know how to trade? What? I was like, so inside I'm laughing, man. I'm laughing hard. So inside I'm laughing hard, but I'm like, okay, what? This person doesn't know how to trade? And I was shocked. And he was like, yeah, even his business partners don't know how to trade. They don't have time to trade. I'm like, so y'all just decided to open up a brokerage, and wow, I was shocked when he started talking to me and telling me, listen, you do know that only 3% of traders have their trades activated in a real market because they have authority to the real market. So this tells me that what's being said was just kind of like enhanced to me. So people were talking about different brokers, but it's not the brokers, it's the traders getting grouped. So you become a B trader or you become an A trader. A traders are only 3%. So he was telling me 3% are A traders. The 97% are all B book traders. So why throw B book traders, right, that don't know how to trade into a live market and allow him to lose money? So what he does is he'll activate that 3%, right? Those traders that are within that 3%, he'll activate their trades in a live market because he's going to make money. So if you're not making money for the broker, well, yeah. I'm just giving you my, my personal opinions on, the conversations that I had with this person today and, what he showed me. So, see, the thing is that he showed me and I mean, guys, I was literally in the office and I could see the order flow. Guys, I could see the order flow. And it doesn't look like, you see, it's order sheets. It's not, you see, it's not candlesticks or, you get people who tell you like, oh my gosh, there's a whole bunch of liquidity sitting at this level. I didn't see that. I saw order sheets. I saw actual order flow. You understand? And I was like, wow. And being the inquisitive person I am, I asked, listen, what's that? And he's like, yeah, those are orders that are on an order sheet that he'd activated. And the funniest thing is that when you are a B trader, your trade gets activated now. He actually showed me this. So your trade gets activated now. You activate it. So you say buy now, right? They can put your buy 15 minutes later. But it's already buying now on your side. Because it's an in-house situation. You understand? So your order could be, 30 minutes delayed. But you're blowing now. You understand? So I was like, what? He's like, yeah, this is an order sheet, but everybody is in a queue when their order is triggered. So on your side, it's triggered. You see it happening. Prices going up, you're getting money, but on their side, you're still in a queue. Guys, I saw this. I'm telling you what I saw. I saw order flow. You get me? I saw order flow. So you're in a queue, but your trade is being activated. I just saw this and I'm like, what? And he's like, yeah. So many people, right? Many people, get involved in their brokerage and activate trades. So we can't, he says, there's no way the server is going to be able to activate everybody at the same time. It doesn't work like that. It doesn't work like that. What happens is you get put into a queue. Right? You get put into a queue. And it's the weirdest thing. It is the weirdest thing. He says you get put into a queue, right? And only when you are then brought forward from your queue, whether maybe you person number 30 or person 300. Because your trade could be 300 away from being activated. You're not activated right now at this time. You understand? So what they do is they activate your trade, right? Every broker, guys. It's not even, whether every broker can choose who they want to activate in a real market. That's the craziest thing. He literally told me that, listen, I choose, or my crew will choose. My people that work for me will see who's making money, because a brokerage makes money when they put you into a live market. They lose money if you lose money. So why put you into a live market? If they know you're going to lose money, why put you into a live market? You understand? Why put you into a live market? So they put you into their in-house market. It's called in-house, right? But you see, this is where people got it confused. So it's not an A book broker and a B book broker anymore. No, it's an A book trader and a B book trader. If you're an A book trader, you'll get activated in a real market because they make money off of you. When you're a B book trader, you go in-house so that if you lose money, right, you don't lose money in a real market and they don't lose money. So when he explained this to me, it made sense to me and I was like, wow. So there isn't an A book and a B book broker. It's an A book and a B book group within the traders. So let's say you don't know how to trade and you lose money, right? So what happens is you then get put into a group of B book traders until you can prove yourself worthy to be activated in a real market. You get me? So for me, I was shocked because I'm seeing these order sheets. He's showing me everything, guys. I'm there and he's literally showing me. I'm seeing trades being activated, right? But the trade is saying something like 3001, which means that you are 3001 in that line to being activated. Now they activate quite quickly, right? But they don't activate immediately. That's what he's telling me. He's like, listen, your trades, unless you're in a real market, your trades don't get activated immediately. You go into a waiting list. You understand? You go into a waiting list. And when you're in the waiting list, right, then if you are 300 in the line, everybody behind you can't just be activated. It doesn't work like that. So yes, your trade gets activated, but it doesn't get activated. Like it gets activated and you see it getting activated and you see your money going up and down, but that's because you're not in a live market. You understand? You're not in a live market. You understand? When you're in a live market, and because there's only 3%, I feel like he said something like there's not much of a waiting list. So because the amount is so less, right, in regards to being an A book trader and a B book trader, right? So he says an A book trader most of the time will have theirs activated immediately, right? Immediately. Whereas if you're an in-house trader, you're trading on their grounds. When you're an in-house trader, you can trade now, but your actual trade only gets activated 30 minutes later. You get me? So we think that, you think that your trade is being activated now because you can see it running. It's going up, it's going down. Maybe you're winning, maybe you're losing, whatever the case is, to find out that your trade is only going to be active in 30 minutes because you're in a queue. But because you're in-house, it doesn't really make sense. It doesn't really matter. So your trade is only active 30 minutes later, but you see it on your MT4 running now, but it hasn't been activated. You understand? So you're in a queue, right? So you're in a queue, but you've been activated, but you don't know that your trade's only actually going to be activated You know, if you like I said, if you're maybe trader, if everybody's come in and put in a trade for 330, right? And there was 5,000 people that activated a trade, do you think the server just activates all 500? No. You get put into a queue and the server will then activate. That's why he says between 15 and 30 minutes is a waiting period. Even though you're in the market and you see yourself in the market, they haven't activated your trade. So I was shocked because I saw this order flow, guys. I saw it live. I saw these trades getting activated, but they're not triggered on the system. So the system doesn't trigger it, but on your side, the minute you go buy, it buys. But on their side, it hasn't been triggered. You understand? That's why sometimes you'll find out that maybe you can't close your profits. Because you might find out that you can't close your profits because your trade hasn't been activated yet. So you'll find out that you're having issues closing a trade, especially on volatility, because your trade is 300 people. There's 300 people in front of you. And you're trying to close now, right? And you'll find out that your trade hasn't been activated. So how are they going to give you profits? And I was just stunned. I was just like, what? I was just shocked. La Bena Tabo, bro, if you don't want to be here, move, bro. Move. Nobody's forcing you to be here in this live, bro. If it's boring you, leave. Bounce. Go. Anyway, forget him. Let's move on, right? So I saw all of this. And for me, I was like, in my head, I'm just thinking like, this is madness. This is madness. So I was just shocked. I was just shocked. And he tells me that majority of traders that actually make money. So obviously he owns the brokerage, or he's at least one of the co-owners. Funny enough, he tells me that the long-term trades actually make real money. Because every time they stay in a market for a certain amount of hours, right, they can charge a certain percentage on the trade. I think it's the overnight thing. So he says that's another thing that helps him, right? You know, in regards to brokerage. But he says that the only time the brokerage actually makes money is when the A-book traders are activated in a market. Because if you lose a trade in a live market, they lose money. You understand? They lose money. So in order for a broker not to lose money, they'll put you in-house. Until you can prove that you're not going to lose money, they will not activate your trade in a live market. Forget about it. He literally told me 3%. 3% of his traders, 3% of his traders are A traders, A book traders that actually get their trades activated in a live market. The rest, it's an in-house situation. So when you lose and it's in-house, they make money. But if you lose in a live market, they lose money. Yeah, so in regards to spread, I feel like they can't open or close spreads in a live market. However, though, they can manipulate that spreads in-house. So when you see them opening up spreads, you're probably a B-book trader. You understand? So basically, it's as simple as that. If you are a book trader, they expect you to be making money. They expect to be making money off you in a live market. Because when you lose a trade, they lose money. You understand? When you trade a live market, right? When you trade a live market and that broker loses that trade, they lose money. I think they get penalized. They get penalized. You understand? There's a certain penalty that takes place. They lose money. So in order to not lose money, we just don't put you into a real market. You understand? Even the IBs, he was even telling me, because I was speaking about IBs and stuff, and he was even telling me that majority of his IBs can't even trade. I mean, this tells you something. This really opened my eyes. Like he says, majority of his IBs actually can't trade. They themselves are B-book traders. So it's just an eye-opener for everybody, to understand that, you may be trading in-house. You understand? You may be trading in-house. I might be trading in-house. You understand? But how do they lose money? I think there's a penalty. They get penalized for every losing trade. You understand? They get penalized for every losing trade because when they win, they make money. But when they lose, he told me that there's a penalty and they lose money. You understand? That's the difference, guys. That's what you're not getting. The reason you don't go into The reason you don't go into a live market is because the broker will lose money. You understand? The broker will lose money. Now, even if I was a brokerage, guys, no brokerage wants to lose money and get penalized. Imagine how many people can't trade and you're getting penalized for every trade that is not successful in a market. There's a penalty. You understand? There's a penalty. So he told me, like, imagine now if 50,000 people get put into a live market and actually trade and lose. They get their trades activated and lose. That's 50,000 people with their trades getting penalized. And who gets penalized? The broker. You understand? The broker gets penalized every time you lose a trade and you're in a live market. So that's why it's the same as a prop firm. The only way you can, make profits on a prop firm is if you can obviously, succeed and win the challenge. You understand? But there's a certain criteria so they know that you're going to win more money in a live market than lose more money in a live market. You understand? Now, obviously, it's become a situation where, why would they teach? So someone's saying teach. Now, why would they teach you if when you lose, it just goes into their bank account? Every time you lose money, it goes into their bank account because it's an in-house. You're not in a live market if you're not the 3%. So you're not in a live market. So why would I teach how to trade if I want you to lose? You understand? Because if you win, I'll pay you out of my own pocket, and that's okay. I'll pay you out of my own pocket. That's fine. You understand? But I've got 50,000 people losing trade, so that's okay. I can pay you out. But in a live market, if I had 50,000 people losing trades and I'm being penalized for every trade that is at a loss, I'm losing money. So that's how it works. And he explained it to me and it made sense to me. So it's not, I feel like they look at your percentage and they look at how many trades you win and how many trades you lose. So I feel like everybody goes into in-house. That's where you start. And when they can see that, you know what, this person can actually make us more money in a market than us continuing to pay him, let's put him in a live market. Because if we put you in a live market, the market then pays us. The same way whoever runs the market, right, whoever activates their trades, right, their equity provider or whatever the case is, they pay them out to pay me. Right? But if I win them over in a in-house situation, and I do that and they see that, no, this guy is just killing us, we need to put him into a live market so that we can have them now pay us out. We don't have to use our own money anymore. We're going broke because of this guy. That's when they put you into a live market, because now you're going to start making money for them, right? Because they've been paying you, and they're like, okay, cool. This guy's just a winner. Let's put him into a live market. And you become a part of the A-book trader. Oh yeah, it's millions. Millions and millions. Yeah, you see, some of them, you must remember, some brokers don't have the ability, or rather, they don't have a license to put you into a live market. If you're not registered, you see, that's another thing with the South African brokers. You'll find out that they don't have a license to put you into a live market. And you find out that that broker goes broke because there's so many good traders, right? And they can only manipulate to a certain point, right? But if a trade is in advantage to you and not the broker, then no matter what they do. So South African brokers, right, might not be licensed to put you into a live market. So automatically they're a B-book broker because they can only use B-book traders. Everybody is in-house. But when you are licensed to put someone into a real market, then you can choose who you want to put into that market. Because who you choose is going to be who makes money for you. It should be making sense now. It should be making sense now. I feel like that's probably why, South African brokers fall. Because you find out that they've got some really, really good traders. You understand? They've got some really, really good traders. And if they in-house, they need to pay them out of their own pockets. So if they're losing more than they're winning in regards to the broker, then the broker is going to fall. Because they don't have a license to put you into a live account or into a live market. You get me? So yes, it's true. There's a B-book broker and an A-book broker, right? No. So there's a B-book broker and there's a B-book and an A-book broker. So the B-book and the A-book broker can then put you into a situation where now you become an A-book. An A-book being live market, an A-book trader. Or you become a B-book trader, because they can be a B-book broker and an A book broker, whereas South African brokers might only be B book because they don't have a license to put you into a real account. I mean, a live account. You understand? So the only way they can make their money is if you trade in-house until they go broke. I hope it's making sense now, yeah? I'm going to be honest. Majority of the guys at the brokerage don't even know how to trade. They only have a system that can activate your trades and put you into a market, which is either in-house or put you into a live market. And that's it. They don't need to know how to trade. They don't need to know where liquidity is. They're just activating your trades. So if they licensed to put you into a live market, then they are an A book trader. But they're also a B book trader because they're going to divide traders that make them money. Now listen to this again. I'm going to say this one more time. Right? I'm going to say this one more time. So when you trade, they look at you and they're like, okay, cool. This person is winning more than he's losing. We're tired of paying him out. Let's put him into a live market so that we can now make money off of him. As much as we were making money off of him in-house, we were losing more than we were making. So now, if he goes into a live market and he loses, we get penalized. But if we only have 3%, so let's say the 3% is only 50 traders. I'd rather have 50 traders, right, winning in a live market as a broker and have 50,000 traders losing in-house. So does that make sense? So if you are not registered and you do not have authority to put a trader into an actual live market, then you automatically become a B book trader because everything's going to be in-house. But when you can actually take A book traders, put them into a live market, and B book traders in-house, then you're actually a genuine brokerage. Do you understand? So if there's certain licenses, and I think it's an OPS license, you need an OPS license to be considered or rather able to put someone into a live market. If you don't have an OP, I think it's an OP something license, he was telling me. If you don't have an OPS license or something like that, then you're automatically a B book. So basically, yeah. So like I was saying, when you're in-house, your trade gets activated now, but you'll find out on your side, your trade gets activated, but only 30 minutes later does it actually get activated on their system. So that's crazy. It's crazy what I learned. But now, it makes so much sense to me because he literally told me now 97% of South African traders are in-house. So if you close before 30 minutes, you can't withdraw. If I feel like if your trade is not activated, that's probably the case. I don't know. But what I do understand now is how this is. So everybody was talking before. Everybody was saying, yeah, you get a B book broker and an A book broker. So there's really no such. You can be both, right? You can actually be both. And then you can just plan who is going to be in the A book and who is going to be in the B book. The A book goes into a live market and the B book goes in-house. You understand? So even that's why they're able to pay you out. So even if you're a B book, right, trader, then, you know, if your trade goes accordingly, then they're going to pay you out. But I feel like that's why they take so long to pay you out, because you might find out more people are winning the brokerage over than losing. So they need money to be generated, right? So I feel like on a winning, right, when you win the broker over, you're taking money out of the broker. You understand? They don't get penalized. If you lose, they don't get penalized, but they do get penalized in a real market. You understand? So I hope that helps everybody. Now you kind of like understand how B booking and A booking works. So if you're an A book trader, you're in a live market. And if you're a B book trader, you're not in a live market. Yeah. So, yeah. Another thing I wanted to teach you guys was, I think this is the part where we go on to the charts. So, I'm just trying to see. Okay, so to be an A book trader, I feel like you need to prove that you're not going to penalize the broker by losing trades. And when you fail to be an A, when you continue to lose money, you're not going to be they're never going to put you into a live market because you're just going to lose money. So that's how it works. If you're going to lose, if you continue to lose money, then you're not going to be in A book trader ever. Anyway, let's quickly get into this. Let's just see. All right, let's activate this quickly. Okay, let's go. We're here. All right. So what I wanted to teach you guys was, you guys need to understand that even if you with an A book or a B book broker, I don't see it as a difference. I feel like you can still chow the broker. And that way they'll put you into a book situation or whatever the case is. So, here, I'm going to just quickly get into this here. Windows Boot Manager, select boot device. What the hell happened here? Okay, cool. Okay. Done. All right. Cool. So we are going to go onto the screen there. And then turn off the commenting. Come in over here so I can connect. Okay, let's remove this. Okay. Settings. Add device. There we go. Sweet. Okay. All right. Cool. So let's quickly get into this. Okay, so we can obviously all see my trading view app there. Let's just make it bigger. Perhaps even go into a full screen. So yeah, okay, cool. Okay. So yeah, cool. All right. Okay, so here we are, right? Can everybody see my screen? Can't see my comments. So let's just put the comments on for 2 seconds. Just so. Can everybody see my screen? I don't know what happened there. Hold on. Let's try again. Just give me a second. Let me switch it off. I don't think the camera is dirty. I feel like there's just not enough light. Let's check. Is that better? Better. So see? Okay, great. All right. Okay, cool. I'm going to turn up the commenting now that we've got the screen going. All right, cool. So what I wanted to show you guys today was what and how to, see where the market is going. So, right, what you want to look at, and this is what you always want to look at, is liquidity. Nothing more. You want to look at nothing more but liquidity, right? Where are the orders sitting? So obviously, right, price came in and took those orders, right? So now we have orders sitting over here, and over there, right? So these are the places that we could obviously expect price to want to go to, right? So for me personally, I feel like, once price breaks a certain level, so once price takes out this level over here, so let's say price does this, it's telling me, right, that it wants to go for a higher liquidity level. So this is what we want to look out for. We want to look out for these type of lows. And when you start to see these lows, when you start to see these lows, you want to start heading over to a smaller time frame. Now, let's say we were targeting this high, right? So let's say here I am targeting this high. Remember, price hasn't come to this level yet, right? So I'm waiting for price to come into this level and target those highs, right? So here I can see that price fails to take the liquidity there, right? So obviously here, price then goes and it fails to take the liquidity again. So this is telling me that these guys are losing momentum, and sooner or later, they're going to forcefully grab that liquidity, right? But what this is telling me is that, the buyers aren't really strong right now, right? Because they failed over here, came for a test. So they failed over here, came in for this test to push higher in order to grab, this liquidity. So this is telling me that, the buyers are strong, but they're not really strong. Because if buyers were strong, they were supposed to just take. They were supposed to go up and just grab that liquidity, come down and then grab that liquidity. That's if the buyers were strong. But they are seeming to fail. So for me, right, let's make an example, and let's say I wanted to go and test this high, right? So I wanted to go and grab this liquidity, or rather liquidity sitting above these highs, right? So this is my point of interest, and this is what I am looking to target. Now, what I'm looking for, right? What I'm looking for is for price to show me momentum, right? So let's say I go to a 1 hour time frame, right? I'm looking for price to show me momentum. I'm looking for price to take out, right? To take out a certain liquidity, right? So obviously here, we now want to target those highs. So let me mark them out again, right? We want to obviously target these highs as they are now equal highs, and price will obviously, create triple highs now, and price will obviously want to take them out as they did over here, right? So what is this telling me? This is telling me now, right, that if I wanted to target these equal highs over here, right, I would obviously need to get involved in this market. But what am I looking for? I'm looking for them to take liquidity. All right, so for me, right, I'm looking for them to take any liquidity, whether it be buy side or sell side liquidity. As long as they take liquidity, right, I'm going to get involved, because the market's going to give me opportunity to get involved. And I'm going to show you this, right? So here, right, we now go to a 15-minute time frame. So remember now, we have this liquidity sitting over here. Because remember now, price, let's pretend that price hasn't come up to this level yet. So price hasn't come up to here yet. Remember this, price hasn't come up to this. We want to look at how we could have caught the move to get to this level that price is at that circle. So let's remove that, right? And now we want to get involved, right, once price takes out some kind of liquidity, right? That's when we want to get involved, right? But this is showing me my bias, right? So now, right, what I'm looking for is for price to allow me to get involved. Now, I've got liquidity sitting over here. Just give me a second. Got liquidity sitting over here, here, and here, right? So obviously this is telling me that, listen, these guys failed to take the buy side liquidity. They failed to take here. They failed to take here. So obviously they're going to go lower because they're failing to go higher. So what am I looking for? I'm looking for them to generate a sell side liquidity. So I'm looking for them to either take here, or rather first here, right? Then here, then here. And then I'm going to look for this move. And this is where I'm going to show you guys how to enter this move, right? So let's remove all of this so we don't have a messy screen. Okay. So now I go to a 50-minute time frame, right? Because remember, I'm targeting this high. That's what I'm targeting. I'm targeting these highs. These highs are my target point. I'm targeting this liquidity at the high here, right? But I want to see them, right, take out south side liquidity first. So here I see they took out here and here as price came down, right? Then price went up, generated liquidity, and then took it out. So this is showing me now, right, that, I'm going to soon get involved in this market because they're coming to my point of interest. Where is my point of interest? My point of interest is at that low. So once they come and take out that low, right, I'm now looking to get involved. How am I looking to get involved? So one, right, I want to see a change of character to the upside. Soon as I get a change of character to the upside, if you don't know what a change of character is, I'm going to explain to you now. Right. So what I want to look for is a change of character. So where is my change of character? My change of character takes place over here. Right? The very first insufficiency price gives me, I am going to enter. Right? So even if I have to go down to a lower time frame, whether it be a 5 minute or 1 minute, but that first insufficiency price gives me, I'm going to enter. I'm just going to look for a lower time frame for a better entry, right? So over here, price takes out this first buy side liquidity. Now, if we look carefully over here, what does price do? Price comes down, and as they come down, right, because they've given me a change of character, right, so obviously now I'm looking for price to come down and leave an imbalance. So price comes down, doesn't leave an imbalance, right, so it leaves this imbalance, right, but to sell off. I'm not looking to sell off, I'm looking to buy, right, because we've liquidated the sell side liquidity, I'm looking to get into the buy side liquidity. So price comes down, and then price moves up. Now, as price moves up, what does it leave me? It leaves me an insufficiency, right? It leaves me this insufficiency from here to here to get involved in the market. And as you can see, if we got involved in this market, price then went up. And as we got involved in this market, we could have had our low or our stop loss sitting at this low or perhaps this low. And as you can see, as price, we would have had our stop sitting over here. And as you can see, price then goes and tackles that liquidity. Can we all see that? Price goes and we hit our take profit level. Are we on the same page? So, let's go again. Right. So obviously now, I've got this insufficiency over here, right? On the 15-minute time frame. So that insufficiency over there is the first insufficiency to the buy side liquidity. Right? So here is my insufficiency to the buy side liquidity. Right? The very first insufficiency, price leaves after taking out that high. So price goes, liquidates that high, comes down. I'm not looking to sell off this market. I could come into a scalp, but I'm not looking for that. I'm looking to buy into the buy side liquidity. Price goes up, leaves that insufficiency, price taps into that insufficiency, and price never returns back to this level. Let's go to the comments and hope I'm on the same page as everybody else here. Let's go to the comments and see, are we all together here? Make sense? So let's go here again, right? Let's turn off the comments, right? So let's look at this again. How did I start? I started on the 4-hour time frame. I looked at my bias and I was like, okay, fine. We are very much bullish, right? Why? Because we've got this high, low, high, right? In order for us to go bearish, we would need to take out this low. We didn't. So price is still telling me that it wants to go perhaps bullish, generate some kind of liquidity over here, and then take that. Now, automatically I have my bias, right? So my bias is my overall trend, and we are still very much bullish. All right, so now that I know that we are still bullish, I'm going to go to a slightly lower time frame and look for more liquidity that they would then want to take, which they are failing to take. So you see, when price is failing to take liquidity, it's telling you something. It's telling you that they're trying to build more momentum. So they might go lower, right? And then go higher. So here we see that take place. So price builds up this liquidity, comes up, fails to take it, comes down, gets momentum, and then takes out that liquidity. So what this is telling you is that sooner or later, they will take out that liquidity. But we don't have to worry about that because we're getting involved at the beginning of the move. So now, right, one thing I want to look for, right, is liquidity to the downside. So because, you know, they failed to take the buy side liquidity over here as they came up, I'm looking for them to now take the sell side liquidity because they've had a chance to take this, they failed. They need momentum. So obviously this is telling me that they need momentum to get a potential increase in order flow to take out that liquidity. So here we have a bunch of sell side liquidity, a bunch of sell limits. People were trying to go short over here. People were also trying to go long over here. So people were trying to short the market, but also people were going long over here. So I'm looking at this being my point of interest. So what happens is price fails to go up. Now we've got this liquidity generated, right? So what did they do? They failed. So if you look over here, right? Look at how they continue. When they failed, when they fail a low, they go for a high. So here, they failed to take out that liquidity, right? Price then went down, right? And price then went up, right? To get momentum to finally try to take out liquidity, but once again failed, generating liquidity to the upside. So since we're failing here, let's go get momentum from there to take out the liquidity. Now we've got fuel to take out everything we wanted to take out. So now I can now target my highs. So we failed to take this. So that's what I'm going to target. Now that we've targeted the low, I'm happy. We've taken the sell side liquidity. We could have gotten into this market, but I am looking at my point of interest to be in buys to buy off this market. So here we are. We're sitting at this level where there is liquidity. So price has failed to take that, and now we have that created. As price comes down, creates that. So my target is to take that. So how do I want to get involved? Now, because we've taken everybody out over here. Now, remember when I told you that there was a trap? This is almost like a trap. So they trap all these guys from doing anything in the market. They can't sell, nor can they buy. Because if they sell, right, we then take them out. Right? And if they were buying, they got taken out. So either way, these guys were fucked in this market. So let's quickly do that again. Right. So now we are targeting this level of liquidity. So because this is what we've created, I'm looking at that and I'm looking at this. And I'm obviously looking at that and probably a fail somewhere roughly around here maybe. So they might take this and then perhaps fail somewhere over here. Now we don't know, but we can just target, right? But what I want to do now is get involved. So as price comes down, right? So obviously as price comes down now, it takes what it needs to take, right? So if we now go to a lower time frame, because I can see now that we've almost created a certain high or low level here, which is obviously liquidity that price will want to now take, which will be a reason for me to get involved in the market because they're going to get fuel from this level to go for those highs. Am I making sense? They're going to get fuel from this level to go for those highs. So I'm going to go down to a 50-minute time frame and I'm going to see if I can get involved. So obviously they're going to want to take out that high. So they want to go and try get involved, right over there at that circle. So what we could do, right? What we could do is we can now look, right? So there's liquidity up there, but the change, right? The change, right, will take place soon as price takes out a high. So let's look here carefully. It might not look like anything to you, but it is. So here, price goes up, price comes down, price goes up. What did they take? They took liquidity, right? So my first thing now is as price comes down, since they've taken upside liquidity, they're going to take downside liquidity. So now what am I looking for? I'm looking for a buy side liquidity and to get involved because I'm trying to buy this market. I'm trying to get involved now because they've taken, so they failed to take out that, right? They came in, took it, right? So they took liquidity to this upside and this upside over here. So great. Now what do they want to do? They want to take liquidity to the downside. What do? They take the liquidity. For me, right, I'm now looking to get involved in this market because they've taken the buy side liquidity, right? We're now looking for that sell side liquidity. They've taken it. Now I'm looking for them to buy. There's nowhere else to buy besides here. So there's nowhere else for them to take liquidity besides here. So I'm going to target that high, right? Where am I going to get involved? I'm going to get involved in the very first insufficiency price shows me, where there is volatility. So when there's an insufficiency in price, there's volatility in the market. You understand? So price came down over here, and as you can see, huge candle leaving a insufficiency. Right. But I'm not going to get involved over there because I'm not looking for them to take out this low. Why? Because they've gone to my point of interest and they've trapped whoever they needed to trap. So I'm looking to buy this market. So what happens is I now look for buying opportunity. Price comes down, liquidates, and as price comes down, it gives me this fair value gap. Right? It gives me this fair value gap. Because now, we've generated this liquidity. So obviously now they want to go and take that liquidity. They want to take this. They want to take this. And everything else. So I am going to then target that high over there. So I'm going to put a line over here. That is my target, and I will then see what price does, right? So that's my target. So what happens is I can now get involved in this market. So I get involved over here. It's the very first time price shows itself wanting to take out that liquidity. So price takes out that liquidity. I target that level. Take profit hit, right? I target the next liquidity, take profit hit. Price then comes down for a retest. As you can see over here, price then retests that level. Right there, gives me an impulse move. And as it gives me an impulse move, what am I looking for? Just remove that, right? I'm looking to target this high, right? Now I'm looking to target this high. So now I target that high. Boom. Take profit hit. Now what am I targeting? Now I'm targeting the next high of liquidity. Take profit hit. Finally, my level comes in and we fail. Right? But as long as we don't take this low out, I'm holding my positions. Price comes down, generate whatever it needs to generate in order to get momentum to push higher. And finally, my final take profit is now hit. And this was a successful day for me because I basically traded from fucking Monday all the way into Wednesday and perhaps a little bit into Thursday. So this would have been a swing trade, but if it wasn't a swing trade, I would have traded daily as I took my profits as I went in to obviously liquidate this buy side liquidity that the market had basically given me in order to liquidate. And that's what we did. So this was a successful trade. I hope this is making sense to you, right? So, let's put on the comments and just see if we're all on the same page. Same page? Remember this. Every time price liquidates a high, whether it be buy side or sell side liquidity, they're going to give you an option to get involved, right? So once price, you must remember this, once price takes out this high, right? Price is going to give you a chance to get involved, right? So once price takes out this high, and you now see price going up, right? But price is not leaving you a fair value gap, right? What you can do is you can then go to a 5-minute time frame, right? Now look at this. Over here, what does price do? Price leaves you a fair value gap in order to tackle your next buy side liquidity. So what I'm looking at is now, if that's my situation, my stop is over here. Right? So my stop is over there. You can see price doesn't come back. And if price doesn't come back, I'm very happy running that liquidity. Hope it makes sense. Every time, guys, I'm telling you, every single time price takes out liquidity, they're going to give you an option to get into the market again. Every single time, and I mean it, every single time. So, let's say we go to a 5-minute time frame. I'm just going to show you it again, right? Here, what did price do? Price took out this high. Look at this. Price took out, as price went up, price took out that liquidity. What does it leave behind? An insufficiency over here, right? So you want to go for the very first insufficiency price gives you. You understand? Especially for a buy move, right? So now I'm looking for price to probably come into this level. Shit. And then take off. So we take that. How do I know it's a continuation? Guys, that's a stupid question. So for me, I feel like you clearly don't know how to trade. So that's why you would be asking questions, because you can see that price is continuing. We can see that we are in a bullish market, but also price is continuing to give us higher highs, as you can see over here, right? But even though price came up over here, why? Because we haven't taken out the south side liquidity. So I'm waiting for them to take out the buy side liquidity, as they're on the verge of doing that, and then take out the south side liquidity. All right. You understand? So what could happen is, so because they've generated all this liquidity to the upside, so price came in, took that, right? And then price came down and took that. Watch this, right? Price then came in, and once they took that, price is now heading for that. But overall, if I go to my 1 hour time frame, I am very much bullish. So I'm going to target this liquidity over here. So I'm looking for price to obviously go up and take that liquidity, and I'm going to get involved when price comes down over here. All right. Anyway, guys, I just wanted to show you that. So watch the market every single time it takes out something. So let's go back to a market. I just want to show you guys something. Right? So if we look over here, what does price do? Price takes out this low, right? And then after liquidating that low, what does price do? Price gives us this imbalance sitting over here. And what happens? Price then goes to take out that high because they've taken out the low. You with me? So when they came down, they took this. Right? They took that as they were coming down. So now what are they going for? Right? They're going for the high. Again, what does price do? It leaves this insufficiency. And if you look carefully, price just taps into it and gives you your entry. This is a 1 minute time frame. Oh, sorry, this is a 1 hour time frame. Is it a 1 hour? Yeah, it's 1 hour. So what I'm saying is, right? So I'm looking at my bias, right? So now what I'm looking at, like I was saying, is for price to take out this south side liquidity, right? But also, I'm hoping for price to take out this liquidity sitting over here. But should price fail, then it's obviously telling me that the sellers are weak and I can now target buy side liquidity. So now, what happens? Price takes out a low. So let's go to a 50-minute time frame so we can get a much better entry. So as price goes up, you can see over here, price generates this liquidity, right? As price comes down, fails to take this liquidity, pushes up to generate enough momentum, right? To generate some type of momentum, right? To push price lower to try to take that low. But as they go, they generate this liquidity and then price goes up, but fails to take out that high, which means that now they're going to go and test the low. They want to go take everything they've generated over here, they want to take it. So what happens is price comes down, right? And what does it do? Takes everything. So I'm targeting this high, right? I'm targeting this high. So all I'm looking for is price to give me a reason to get into the market. Now, obviously, as you can see, when price takes out this low, what does it do? Right? It leaves an insufficiency. Once again, I don't just talk. Look at this. There you can see price came down, swept, and what did it do? Left an insufficiency for you to get involved. You get involved, what are you targeting? You're targeting this low. Price starts to fail this low. But what happens? Boom. First take on liquidity taken. And as price takes that high out, what does it do? It leaves this insufficiency. What happens? Price comes back to that insufficiency and price goes and takes out all this other buy side liquidity. So here, again, that's not working. Hold on. Anyway, so here, okay, I don't know what's happening here, but anyway, yeah. So, my chart is giving me shit. Anyway, let me just go back to this chart quickly so you can just see where we were at. Right, there we go. Okay. So there's my scribble. Right. So there's my entry into the market, since that's where I'm going. Okay, right. So here, what do? We take that sell side liquidity. We could get in over here to go and obviously take out this. We have some over here. And obviously some at the bottom over there. So that's what we are going to go and try take out, but we fail. So now that we fail, right, what are we looking for? Very first change of character. Where is the change of character? Change of character sits over here. Price goes up, gives a change of character. But what does it do? As it gives a change of character, it takes that liquidity. So I'm expecting price to go up, right? And then now, because it's showing me that price wants to go up, I'm looking to get involved. Where do I get involved? Within this insufficiency. So let's just take this all away, just so everybody can see what I'm talking about here. So I'm targeting this liquidity. Here is my fair value gap. As you can see, so as price takes out that high to give me that change of character, I'm looking now to target this liquidity. So now we can take this away and that away, because we've taken sell side liquidity. We're now on the verge to take buy side liquidity, right? So I'm looking to take this high that's just been created out, 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 right? So I'm looking to take all of this out, right? I'm looking to take all of that out. So what happens is I now target my final liquidity, which is sitting at this level. But now they're starting to push down, right? So let's say now they're starting to push down. Now they're generating all this liquidity, right? But I'm safe if I put my stop at this low. I'm safe. And I know that, right? So I know this. So what am I looking for now? I'm now targeting these highs. The highs that failed the first time should now be targeted. High, high. What happens? Price goes up, generates liquidity to get momentum, takes, and I have hit my take profit level. Now there's liquidity generated over here. Price needs fuel, generates liquidity. And then what happens? Price takes. So price then takes this liquidity sitting at this level. As price goes up, creates liquidity, price comes down, takes. Generates, goes up, takes. This is how it works. So our SL was here. And price never once returned. So now I'm looking for price to take. So we've got liquidity over here. Before price goes down, I'm looking for price to take. They've taken. So now I'm looking for price to take, go up, take, go up, take. Anyway, that's what I wanted to come show you guys. If you don't get it, forget about it. All right, guys. So that's what I wanted to show you guys. I hope you guys enjoyed it. Yeah. And that's it. So what you want to do is you just want to run liquidity. That's what you want to run. And trust me, they'll give you an option to get in. Now, obviously here, right? Here, they didn't give, they obviously let us in on, so Monday we could have taken this trade to run the low. So Monday we run the low here. Price goes up to run the Monday high the next day. So on Tuesday we're holding to run the Monday high, which we run. All right. Anyway, if you just arrived, you missed it. Oh well. All right, guys, so I'm out. And I will see you guys on the other side. Yeah. Liquidity is fuel for the market. So, yeah. Like I said, I've got a mentorship. So if you're going to struggle and you don't understand this and you need to go in from the beginning, this is nothing compared to what you learn in the mentorship. This is nothing. You learn way better strategies. If you want to really get involved in trading, if you can use this, then use it. This is free knowledge that I've given you. So, yeah. All right. Cool, guys. Yeah. So just understand that every single time, and I can show you it. I don't know how many times I've already shown it to you, but I can show it to you over and over again. Once they take out the low, you understand, they'll give you an opportunity. So obviously, same thing happened over here. I just want to show you now that I'm on another chart. You can see over here we take out the low, right? Or rather, we fail to take out the low. Okay, so we failed to take out the low. However, though, this low was generated, and so was this, and so was this. So let's say they take out this low, right? What do they leave? As they take out that low, they leave a insufficiency. Look here. Once again, what does price do? Price leaves us insufficiency over there, as you can see. And we can now start targeting the rest of the lows. And as you can see, take profit hit, take profit hit. So I'm just showing you guys that, yeah, it works. You just need to know what you're looking for. But if you don't know, I will teach you in the mentorships. As you can see, price just continued going down. And as price went down, we just kept on taking all this liquidity to the downside. So, yeah. Always look where liquidity is. Always look where liquidity is. And it's as simple as that, guys. So yeah, remember guys, if you're going to be a scalper, then this is for scalping. If you're going to be a intraday trader, then this could probably be intraday trading. But if you're going to be a swinger, you now need to start analyzing. I see someone's asking me a question here. You need to start analyzing on a daily time frame. So let me quickly go over this quickly. Once again, we're not going to target this low. We're not. Why the fuck would I target this low? We're not going to target this low. Why? Because price is obviously showing itself bullish. So what am I going to target? I'm going to target this high. This is what I'm going to target. I'm going to target this high. Right? So now I know what I'm targeting. See? Simple as that. Now I know what I'm targeting. And as I go to a lower time frame, I want to run these liquidities. So I'm going to run, I ran this, I want to run that, and I now want to run that. And how do I run it? I get involved in a smaller market. So I go to maybe to a 1 hour time frame. I want to see a run on that liquidity. And once I get a run on that liquidity, I'm looking to get involved. So I can see I haven't gotten a run yet. Once I get a run on that liquidity, I'm looking for the first fair value gap and I'm getting involved. Simple as that. And that's going to lead you to another piece of the puzzle within this market. It's just the way the algorithm runs, guys. It runs, it takes liquidity. If it can't take the next batch of liquidity, doesn't mean it's going to take out a low. It's going to get fuel. So here, it didn't take out this high. So we can see over here, price didn't take out this high. What it did though, it went and got fuel. Right? It went and got fuel over here. But what happened was price went up and price came down, took that, right? So it trapped these guys and then, like I said before, it left that fair value gap sitting over here. And that would have been the entry to then run those highs. All right. Simple as that. So now, should price fail to take out that high as it is now, it's coming to get fuel. So perhaps it's coming to get fuel from maybe 50%. So you can use a fib maybe and say, okay, fine. You know, get in over here. Right, so we want to get into discount. So probably here or somewhere here. And then try run those highs. And that's just another strategy that you can use. And once you run those highs, once it takes those highs, you then want to see price So price is now giving you a confirmation that it wants to go higher. So obviously you can then take your fib again and try run more highs, because what are we targeting? We are targeting this high over here. And if we're targeting that high, then we're expecting price to take it and then start to fall to take the south side liquidity. Just the way the market works. Yeah. All right, guys, so I'm done. I hope you guys all enjoyed. I hope you guys all enjoyed that. Hope you guys all enjoyed that. I hope you guys have taken notes. So, I go live at very odd times. I know, right? I just couldn't sleep, so I went live. And why not? So, yeah. How do you know the FVG it will make to use off? The very first fair value gap, price is going to use that to go higher. The very first, so if we sell in the market, you want to look for the highest fair value gap. So if there's a fair value gap over here and a fair value gap over here, price is most likely to break out of all those fair value gaps and go to the highest fair value gap to get its sell, to get its momentum to sell. As for a buy, it's the very first insufficiency, because that's what price is going to tap into to go higher. Yeah. All right, guys, but I'm done. So, yes, this is Cartier. Is the chain also Cartier? Yes, so that's Cartier. That's the live bracelet. This is the live ring. I've shown a picture, and this is obviously the chain. So yeah. So what I'm going to do is I'm going to save the live for like 24 hours and I'm going to delete it. All right. Peace.